Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending January 13th, 2023. Looking at the market indexes for the week, the TSX, Nasdaq, S&P 500, Dow Jones, and Russell 2000 were all up for the positive week. Gold was up and oil was up as well. The positivity started last week with US job numbers where wage inflation slowed. And this week, the US CPI, Consumer Price Index numbers, were mostly as expected or better. Oil was also up on China's reopening. Looking at Canada, the grocery store is one place where Canadians have really felt the sting of inflation, and there's much debate about whether rising costs for labor, fuel, for everything are getting passed on to shoppers or if grocery chains are using inflation as an excuse to jack up prices. The supermarket chain Loblaws made something like 1 million more a day last year over 2021, no doubt thanks to charging, for instance, $37.03 for a pack of, quote, premium chicken breasts. It looks like, given the market dominance of Loblaws and Sobeys, grocery prices will keep rising unless the government follows the UK or Spain by taxing excess corporate profits. Looking at stock market news, Algonquin Power and Utilities, AQN, slashed its dividend by 40% this week from 18 cents to 10 cents per common share and said it will look to sell an additional 1 billion in assets as part of a plan to strengthen its financial position. Proceeds from the next phase of renewable asset recycling and additional asset sales are expected to be used to pay down debt and continue to fund growth. AQN continues to pursue the Kentucky Power acquisition, which is expected to generate long-term value for customers and investors alike. AQN expects adjusted net earnings per common share, excluding gains or losses on asset sales, of 55 cents to 61 cents for the 2023 fiscal year. These would give the stock a price to earnings of 17 and 15 respectively as of Thursday's close of the day price. Turning to the US, the big news item for the week was the US Consumer Price Index. So the core CPI for the month of December year over year, the actual was 5.7% inflation, as was the expected, but the previous month's year over year was 6%. So it did come down. And the month over month core CPI, which excludes energy and food, the actual increase was 0.3%, which was the same as expected, but that was actually up a little bit from the previous month over year. The headline inflation month over month was actually a negative 0.1%, which was lower than expected and lower than the previous month's month over month. And the year over year for the month of December was 6.5%, which was expected, but it was lower than the 7.1% that they had year over year in November. So the overall US inflation numbers just came in line with the consensus forecast, and the market didn't really budge very much. The fall in energy prices contributed to a further decline in headline inflation to 6.5% in December from the 7.1% in November. Core came in at 5.7%, with the month on month pace edging higher from 0.2% to 0.3%, with some components such as apparel and housing surprising a little on the upside. This CPI report makes a downshift by the Fed to a 0.25% rate hike a little more likely, but far from done deal given such factors as core services, excluding houses. Even with the December CPI negative month over month, it doesn't mean the Fed is going to ease off its rate hike plan, since year over year inflation is still well above the policymakers' 2% target. The US stock market's Q4 earnings had begun on Friday, and JP Morgan Chase, Wells Fargo, and Bank of America all reported earnings Friday morning as investors look to Wall Street for evidence about the economy's health and insight about where things are headed. Bank of America and JP Morgan both beat the street as higher rates help bolster interest income. JP Morgan CEO Jamie Dimon on Friday said the US economy remains strong, but warned of potential turbulence stemming from Russia's war in Ukraine and the still high inflation. There is talk about the desired soft landing in the US economy. Inflation is coming down, but the economy and employment remain strong. This might be the best case outcome for everyone was hoping for, given getting rid of inflation without a recession. The continued depreciation of the US dollar, see the 3-month Bloomberg chart of the DXY index, is a reflection of the market's reassessment of the US monetary policy, which is becoming less tight relative to that in the other major advanced economies. It contributes at the margin to global economic well being and will be welcomed by many market segments. Other nations will appreciate the weaker dollar so they can pay less for commodities. Gold's price will appreciate and has been since it is stated in the weaker dollar. Now, Americans are also racking up more and more credit card debt. 930 billion in the third quarter of 2022, according to the New York Federal Reserve, in fact. Personal savings have fallen from 4.8 trillion in Q2 of 2021 to only 507 billion in Q3 of 2022. The spending is still happening just using debt, and the savings are way down from the depths of the COVID crisis. Goldman Sachs is set to lay off up to 3,200 employees this week, a warning sign that Wall Street is preparing for leaner times this year. There's a slight silver lining, though. Those 3,200 jobs represent about 6.5% of the big bank's workforce, while Goldman was expected to cut up to 8% of its employees. While the Q4 earnings season is starting in the US, big companies seem to be expecting lower earnings than previously forecast. Smaller companies will have some earnings growth, but the companies in the main indexes are wobbling a little. Now for some bits and pieces. The global coal demand is estimated to have increased only marginally in 2022, but enough to push it to an all-time high amid the turmoil of the energy crisis, according to the International Energy Agency's latest annual market report on the sector. The report, which was released mid-December, forecasts that the world's coal consumption will remain at similar levels in the following years in the absence of stronger efforts to accelerate the transition to clean energy. Renewables are set to account for over 90% of global electricity expansion over the next few years, overtaking coal to become the largest source of global electricity by early 2025. And by 2027, solar PV alone is set to be the largest source of power capacity, confirming it as the king of global electricity markets. Note that International Energy Agency is seen as extremely optimistic by many, but their comprehensive reports are still worth thumbing through occasionally. A little bit of bad news in that the World Bank announced global growth is expected to decelerate sharply from 3% to 1.7% in 2023, the third weakest pace of growth in nearly 3 decades, overshadowed only by the global recession caused by the pandemic and the global financial crisis in 2008. The World Bank has grown more pessimistic about the global economy, dramatically cutting its projections for growth. Quote, global growth has slowed to the extent that the global economy is perilously close to falling into recession, end quote, the institution said Tuesday. The World Bank significantly cut its outlook for U.S. economic growth as well, down to 0.5% from its earlier projection of 2.4%. If these projections come to fruition, they would represent the third slowest pace of growth in about 30 years, trailing only the slowdowns triggered by the financial crisis and the COVID pandemic, the World Bank said. Europe in 2023 has zero growth predicted, and China is 4.3% growth, which is low for them. And finally, looking at next week, we have the ongoing US companies reporting. On Monday, we have Morgan Stanley, Goldman Sachs, and on Thursday, we have Procter & Gamble, Netflix, and American Airlines. Some economic events next week. On Tuesday, we have the big event for Canada, the Consumer Price Index data. On Wednesday, we have the US Producer Price Index, the US Retail Sales, Canada's Industrial Product Price Index. On Thursday, we have US housing starts, US oil inventory data, and US jobs data. And finally, on Friday, we have Canadian retail sales data. That concludes my thoughts for the week. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.